Well, we're back with you, and we're going to take a look at our market activity in just a moment. In the meantime, I just came back from the printer. We got our brand new ethanol production numbers in. And in case you're wondering if production ramped up or slid last week, among everything else, it actually declined a little bit. So the production dropped under 1 million barrels per day to 997,000. It had been at 1.024 million. So that was a decline or a decrease of 27,000 barrels a day. Not real big, but significant. It's under 1 million now. The 4-week average just barely over 1 million. That dropped a little bit as well. The ethanol stocks, though, was friendly. It went down 600,000 barrels to 24.9 million, and the imports stayed at zero. So let's see what the markets are doing on the futures. Let's go to the corn with our quotes provided by Bar Chart. Interesting, where the nearbys are higher, the deferreds are weaker, and almost exactly the opposite. Now, the May corn just changed to 13 higher now. It's 738 3/4. Meanwhile, December new crop corn down 11 3/4, and it's at 613. That's an interesting spread change there. Not bad for a 25-cent spread change at one time. Now on the soybeans, you have the May 20.5 lower now at 1669.5 as it appears to be regrouping a bit. Had a high last night of 1697 per bushel. Now, if you take a look at that new crop November contract, we're currently trading at 14.58, and that's down 19 cents on the day. All the action, and I mean almost all the action in the grains, is in the wheat. And we have Chicago, May and July still expanded limit higher. That means they're up by 75 cents on both of those contracts. And if you look at Kansas City, same thing. May and July, 75 cents higher. The deferreds are actually trading mixed. Spring wheat, Minneapolis, May, 58 3/4 higher at 1112.5. 1112.5, my goodness. Let's bring in Todd Bubba Horwitz of BubbaTrading.com. And, well, Bubba, since you and I have been talking, I believe you were bullish on grain since early last winter, and it looks like there is no top to this market. What is the deal here? Are you ever going to change your mind?
Well, yeah, eventually. But right now, what we really have right now is a fear trade. Okay, you know, when you look at wheat, especially Russia, the third largest producer in the world, and suddenly you can see that in the pricing of the model, right? You've got May and July up limit versus September and December that are down on the day. And why is that? Because when you get the contango, this is the backwardation trade, and it's being built on fear because of fear of delivery, fear of production. And suddenly we're seeing this overall driving price because of the issues that are going on in the world, not to mention the economy. We've got a lot of issues in the economy, and with the oil now trading at $108 with a high of 112 overnight, it's a very scary time with this ridiculous inflation and these input costs for farmers. There's just not a lot of good, which propels prices because, again, it's going to be a high-cost production, high cost of delivery, and so prices have to rise, and they're going to continue to go until we have some salvation here. And right now, based on, last night's Fed Union, there was nothing said that said, hey, we're going to go back to, opening up our wells here and becoming an exporter of oil, which will leave us with very high prices.
And one thing that's notable is you have to admit, March U.S. dollar index futures are 329 points higher at 97.735. It continues to gain momentum to the upside, and wheat is still going expanded limit higher this week. In the face of that, that is extremely bullish action. And I just got a new weather update, too. They're talking for moisture in the Midwest in the next week, not in the southwestern plains, or very little of it if they do get any. Well, anyway, thank you, Todd, for talking with us. Todd Bubba Horwitz of BubbaTrading.com. He's in Chicago. We'll break right here. We'll have livestock coming up next.